Good morning, all of you. Okay, yesterday I told you about this decision making that is part and parcel of marginal costing. Now, today I'm going to take into account the budgets and budgetary control. So, people they will get an this thing. What is budget? A future course of action to be taken is nothing but budget. Okay, suppose for example, I'm going to give a small example. When you want to conduct or when you want to go to some other place, you will plan what we have to take, how much luggage we have to carry, and what are the essential things that we have to keep. All those things we'll plan in at present. That is the future course of action. That okay, you are planning now itself. So that is nothing but a budget, and this budget it is compulsory and it is necessary for everyone. In the same way, the businesses also they have to go for budgets. That is future action to be taken. Now only they will take that decision. And don't be of that opinion that this budget is nothing but a big thing. According to ICMA, it is Institute of Cost and Management Accountants. Okay, a budget is a financial or a quantitative statement prepared and approved prior to a definite period of time of the policy to be pursued during that period for the purpose of attaining a given objective. It may include income, expenditure, and employment of capital. So, this is about the definition given by ICMA people. And what are the essentials that we go for this budget? First one is it is a statement. It pertains to a future period. It states action points that need to be followed to attain the objectives of the organization. It may be expressed in monetary units, that is in value, or in physical units, that is quantity, or both. So these are the essentials of a budget. Now, what is budgeting? Budgeting is nothing but a process, the process of planning all flows of financial resources into, within, and from an entity during some specified future period. It includes providing for the detailed allocation of expected available future resources to projects, functions, responsibilities, and time periods. This is about the budgeting. That is processing. We'll go for processing of the budget. Okay, how we have to prepare? Because when you take into account, again, suppose when you go for a tour, when you are going for a tour, you will plan right from the beginning. So from brushes, Colgate, soaps, and what are the dresses that we have to keep, whether the place we are going for a sacred place or we are going to a function. So all those things we have to take into account, and what are the dresses to be worn. Okay, all these things, and what luggages we have to take, what gifts we have to take carry, all these things you will plan today itself, now itself. Okay, today means in now itself. So like that, when you go for this, okay, it is nothing but a budget. In the same way, organizations also they'll prepare the budgets. Okay, and the budgets may be cash budget, purchase budget, sales budget. Okay, like that, you so many budget, expenses budget, income budget. That is tomorrow we have to meet. We must have income resources and to meet the various expenditures. So all these things we have to take into account and we have to prepare now itself. That is how much cash we have to carry. Okay. Additionally, suppose if unforeseen circumstances arises, how much we have to take the cash. All these things, people they'll think about that today itself. So that is nothing but budget. And the processing, that is from first stage to last stage. Okay, from first stage to last stage. So how we have to go when you want to go for a train, you have to book tickets, you have to reserve tickets, and for going to railway station, okay, whether we have to go by bus or whether we have to book a car or auto, whatever it may be. So all these things you have to go. So that process is nothing but budgeting. And uh, organizations, they will prepare so many budgets. Okay, and there should be control. That is, too much is too dangerous. So, for budgeting means, okay, we should not go for all the budgets at a time. We have to control. We have to keep control on the budgets, because so many budgets will come to you. Everything is nothing but a budget. Everything will appear as a budget. So we have to prepare the budgets, and we have to prepare the budgets, and we have to prepare. And there should be a control, there should be a yardstick for regulating the budgets. What budgets are required, what budgets are not required, which are very essential, which are not very essential. All these things we have to take into account. So we have to go for budgetary control. So budgetary control is compulsory. It is nothing but a yardstick. It is nothing but a yardstick. Control in definition of budgetary control. According to ICMA, same England people, budgetary control is the establishment of budgets relating to the responsibilities of executives to the requirements of a policy, and the continuous comparison of actual with budgeted results, either to secure by individual action the objective of the policy or to provide a basis for its revision. So this is nothing but budgetary control. So we have to prepare so many budgets. Then after that, we have to see which budgets are very very essential and which budgets are not essential, that much essential. What priority we have to give to which prior to by which budget we have to give priority, and to which budget we have to give least priority. So all these things we must take into account. And then automatically, after preparing the budgets, we have to see whether the actual performance is going according to the budget or not. When you come across any deviation, people, they have to take the deviations into account, and we have to see how much deviations the budgets as well as the actual performances they are having, whether they are having a favorable variances or unfavorable variances, and what is the rate, what is the quantity of favorable differences, whether they are helping us indirectly or directly, and what are the adverse variances that we are coming across. So all these things we have to take into account, and then we have to control them. We should not go beyond certain limits, because we will have some objectives. The policies whatever we make, okay, they will have the objectives, and that objectives, it must be served, that is, the objectives must be satisfied. So like that, you have to take into account the budgets as well as you have to control the budgets. So budgets and budgetary control, they are very very essential. Sir, okay, what about the budgets, whatever budgets will come across? First, for an organization, purchase budget. In this purchase budget, you will come across the quantity. So last year, how much quantity of materials we purchased? Now, how much quantity we have purchased? Okay, and in future, how much quantity of materials we are going to purchase? We have to purchase. So all these things you will come across in purchase budget. So in quantitative terms, that is in units, we will take into account. Similarly, sales budget. Okay, last year how many sales we came across, and what are the sales at present? How much quantity of sales we are selling, and in future whether the sales are to be increased or whether they are going to be decreased, because in future is uncertain. We have to think about future now itself. So that thing, how much quantity we have to, what is the demand, what is the supply, and what is the other conditions, that is the taste and passions of the customers. So all these things we have to take into account, and we have to go according to that. So preparing a sales budget for tomorrow or for future period, it is nothing but sales budget. Cash budget, this is very very important thing, because money is essential for anything, for anything, whether for birth money is required, and for death also money is required. Okay, so we have to plan about the cash, how much is the receipts portion and how much amount we have to pay, what are the receipts that we are going to get, and what are the payments that we have to make. Because when receipts are less and payments are more, you have to borrow money. So it is not the question of borrowing, please. It is the planning of the persons who are preparing this cash budgets. What are the receipts? What are the payments? Whether the receipts they can able to meet the payments or not. So whether any balance will be left over or not. People they'll think that there should be balance. There should be balance after meeting all the payments, and how much cash we have to keep in hand for to meet the unforeseen circumstances, because we cannot predict, we cannot predict. So how much cash we have to keep, all these things we will come across when you go for cash budget. Similarly, expenses budgets, we will come across different expenses like printing and station, telephone expenses, electricity charges, all these things are nothing but the things. Okay, last year, how much is the electricity bill? This year, what is the electricity bill? In future, what is the electricity bill? So all these things we have to prepare, and that thing is nothing but the expenses budget. Various expenses, not only electricity, but so many things will come into picture, and for that also we have to prepare a budget. So, and that thing budget also, it should be controlled, it should be regulated. There should be an yardstick to control the budgets, but control the expenditure. It should not be too much. In the same way, it should not be less. Okay, what is the requirement? What is the medium requirement that we will come across? We have to see that. And then after cash budget and after expenses budget, you will have flexible budget. Flexible, what is this flexible budget? Okay, according to the capacity of the plant. Okay, suppose 50% capacity, a company or a business, it is using 50% capacity. Okay, and they will come across some expenses. Similarly, they will come across some receipts, all these things. Okay, suppose if we want to increase this capacity from 50% to 60%, on what will be the expenditure? And this thing, it will be based on the past, it will be based on the past or the present. Okay, that is nothing but flexible budget. At what percentage of capacity, at what units, number of units, suppose at 50%, say for example we are producing 10,000 units. So if it is 60%, that is there will be an increase of 2000 units, so 12,000 at 60%. So like that, whether the expenditure is increasing or not, whether we are going to get the income or not, when we are going for 60%, like that we will come across the flexible budget. And after that, master budget, that is taking into account all the budgets. We have to prepare a master budget. That is, whatever budgets we prepared, whatever budgets we come across, so all the things we have to take into account, and we have to prepare a master budget. That is the complete planning of all the items without leaving, without, okay, absconding. We have to prepare everything. So that budget is nothing but the master budget. And the management people, they have to look after whether we are going according to the master budget or not. So when any deviations comes, once again they have to look after whether the budgets, whatever it may be, the budgets that we have prepared, whether we have prepared in a wrong way, or whether the actual performance is going in a other way. So all these things they have to look after. So that is nothing but budgets and budgetary control. So with this, I am going to stop, and tomorrow we are going to continue the same budgets and budgetary control. Thank you. Please subscribe to my channel. Thank you.